If you've delayed addressing your nanny tax obligations, now's the time to act. Here's how to efficiently catch up on your nanny taxes as you prepare for your tax filing due by April 15th. The first step is determining if you have household employees such as nannies and other caregivers, housekeepers, chefs, and even those in nanny shares. You are generally considered an employer for tax purposes if you paid an employee at least $2,700 in 2024 or $1,000 in any single calendar quarter for federal and possibly state unemployment taxes. Note that spouses, children under 21, parents, and employees under 18 are generally excluded from these tax obligations. Step 2 is for employers to secure necessary tax identification numbers. This includes obtaining a federal employer identification number online and a state tax ID from the respective state government's website. Step 3 is to calculate what your employees earned each week. Under the Fair Labor Standards Act, household employees are paid by the hour and at least the prevailing minimum wage rate for your state or locality. They also receive time and a half for hours over 40 in a work week. It is important to break down your employees' pay and hours worked by week to ensure they were paid at least minimum wage and compensated with overtime pay when applicable. Step 4 is to establish your key nanny tax responsibilities. You and your employee pay Social Security and Medicare taxes, which are 7.65% of the employee's gross wages. Paying on time is important to avoid penalties. You're also responsible for the federal unemployment tax. Step 5 is to finish the year-end nanny tax paperwork. Give employees their Form W-2 by January 31st. Check details to avoid mistakes. If you pay Social Security and Medicare taxes, it's taxable for them, but not for you. Remember, household workers are employees, not contractors. Misclassifying them is tax evasion. Submit Form W-3 and Employee Form W-2 to the Social Security Administration by January 31st. Step 6. To fulfill your tax obligations as a household employer, file Schedule H household employment taxes with your tax return. Before filing, gather your employer identification number, EIN, total wages paid, federal income tax withheld, and state unemployment contributions. To avoid penalties, consider remitting taxes quarterly using Form 1040-ES instead of paying at tax time. As an employer, your payroll taxes can range between 9 and 11% of your employees' gross wages. Step 7. Don't forget to take the child and dependent care tax credit. Household employers who legally employ nannies may be eligible for this credit claimed on Form 2441, which allows the deduction of a portion of nanny wages. The maximum qualifying expenses are $3,000 for one child and $6,000 for two or more. The credit percentage is income dependent and can substantially lower tax obligations. Step 8 is to take a deep breath. You got this. Proactive compliance with household payroll obligations is essential. Failure to meet these requirements can lead to substantial penalties, including fines and back taxes. For comprehensive guidance on managing household payroll, you can refer to our free complete guide to household payroll using the link in the description box below. Alternatively, consider GTM for a complete solution, offering direct deposit, automated withholdings, and tax remittance. You can schedule a complimentary consultation with a GTM household employment expert today by calling 800-929-9213 or booking online using the link in the description box below. Thanks for watching. Click the bell to be notified when our next video goes live. And in the meantime, here are 2 more videos that I think you might like.